Hello, my name is Rachel and welcome back to the channel. In today's video, we are going to be looking at some of the best ETFs that are on the market at the moment. We're going to be looking at everything from annualized performance all the way through to their fees, which we know are so important. Ahead of the new financial year, I've been looking at the market as a whole and comparing different ETFs from different providers. In this video, we're going to be covering ETFs from Invesco, from iShares, Vanguard, VanEck, and also HSBC. I will put timestamps in this video, so if you want to skip forward to a different type of ETF, if perhaps you've already invested in a certain type of ETF and want to have a look at the other ETFs that I'm talking through, then please do skip forward to whichever section you will find most useful. We're going to be starting in the best place for building a very diverse portfolio, and that is the FTSE All World. So we're going to be comparing 4 different ETFs here and deciding which one might be the right one for you. So when you're investing in a FTSE All World ETF, you are obviously getting exposure to the whole of the world. A lot of that will be made up of the US, so around 60% of all world ETFs are made up of US stocks, but you are going to be getting exposure to both developed and emerging markets at a very low cost. So the first ETF that I'm going to talk you through is my preference for all world ETFs, and this is one that I'm going to be adding to my portfolio in the next financial year in my investment ISA, and it is the Invesco FTSE All World ETF. Now, the reason this is my favorite ETF on the market at the moment is that the fees are so low. They're actually lower than Vanguard fees. So the code for this one is FWRG, and for this investment we can actually only look at returns for the last 6 months, and this is simply because this is such a new ETF to the market. It was actually established back in June 23, so it hasn't been established for a whole year yet. However, it is tracking the market beautifully to date, and it currently has over £128 million worth of total net assets. So when you are investing in this all-world ETF, you are getting 2,391 different holdings from across the world when you invest in this one simple ETF, and that is why I like ETFs so much. Now, most of the ETFs that I'm going to talk you through in this video all have Microsoft, Apple, and Nvidia as their top 3 holdings. So they are very dominant in the market at the moment, but we really want to do our research and compare different ETFs and make sure that we're getting the best in terms of fees. So Invesco's FWRG is actually the accumulation version of this ETF. Now, the difference between a distributing and accumulation ETF is that a distributing ETF will pay you out your dividends from the companies. So say if you are currently retired and you want to be getting an income from your investments, then a distributing ETF might be a good choice for you. But if you're planning on just growing your wealth and you actually don't want to take money out and have to reinvest it, then accumulating ETFs are probably the best option for you. For me personally, I invest in accumulation ETFs simply because I don't want to have to reinvest that money. I like that it happens automatically. So I'm going through all of the different options and giving you both accumulation and distribution versions. If you wanted to invest in this Invesco All World ETF and wanted the distribution version, then the code for that is FTWG, and the fees for that will remain the same at 0.15%. So moving on now to our next option, perhaps you already have your investment ISA or your stocks and shares ISA or your self-invested personal pension with Vanguard. So perhaps you are limited to investing in only Vanguard ETFs. So I wanted to cover that off in this video as well. So the Vanguard FTSE All World Accumulation ETF, the code for that is VWRP, and the 6-month returns for that are 15.05%, 3-year annualized are 9.60%. The charge for this ETF is 0.22%, so a little bit higher than the Invesco All World ETF, which is why I personally prefer the Invesco one. But again, you might feel more confident investing with Vanguard, or perhaps you have your account with Vanguard and don't have a choice. So we're going to cover standard deviation in this video as well. So the 3-year standard deviation for the Vanguard FTSE All World is 10.21. Now, when you're looking at standard deviation, that is a measure of risk, and the lower the number, the better. So you'll see in some of the more risky and volatile investments that I'm going to cover later in this video, they will have a higher standard deviation, so they are more risky. So where all else is the same with an investment, what you want to do is try and prioritize investing in an ETF that has a lower standard deviation, because that will mean it is less risky and there is less volatility within that ETF. So the number of holdings in the Vanguard FTSE All World is 3,655, and you've got the same top 3 holdings coming in with Microsoft, Apple, and Nvidia. I am going to sound like a broken record in this video because, as I said, top 3 holdings are often the same for a lot of these ETFs. So moving on now to the distribution version of that Vanguard FTSE All World. The code for that is VWRL if you are wanting to invest in a distribution ETF. Okay, so we have covered all of the FTSE All World ETFs that I want to cover in this video. So we're going to move now on to our next section, and that is the S&P 500. Now this is an incredibly popular investment. Warren Buffett says himself that when he passes away, he will be putting his wealth into the S&P 500 for his wife. It's a simple, low-cost way of investing in the US markets, and the past performance has been phenomenal. So you will see higher returns historically from the S&P 500 than you would from a FTSE All World ETF. So I'm going to give you 6 different versions of the S&P 500 ETF in this video, but obviously, as you know, when you're investing in the S&P 500, you are getting a slice of the top 500 companies in the US by only making a single investment. So you're getting a little piece of each and every one of the top 500 companies in the US when you invest in an S&P 500 ETF. So the returns for these 6 different ETFs is going to look very similar if they're doing a good job of tracking that specific market, which they are. So all of the returns do look very similar. So we're not going to go through those in much detail, but what looks very different are the fees. And we all know what a huge impact fees can have on your investments. So to really reiterate the importance of fees over time, I'm just going to give you this quick Vanguard example. So this is how £500 a month might grow under 2 different cost scenarios. So this scenario assumes a gross annual market return of 5%. So with option A, the total costs are 0.5%, and with option B, the costs are 2%. And you can see that after 30 years, you would have £373,532 if you had fees of 0.5%, whereas if your fees were 2%, you'd end up with only £289,357. So the difference is huge. So when we're looking at investments, especially with ETFs, when all else tends to be the same, you really want to be looking at low fees. So let's go through these 6 different ETFs, starting with the lowest fees and then moving down to the highest. So the cheapest S&P 500 ETF that I'm including in this video is the SPDR ETF. Now the code for that is SPX5, and the fees for that are just 0.03%. There's 503 holdings in this ETF, and those top 3 are Microsoft, Apple, and Nvidia, like a broken record. So as I said, the returns should look very similar for these ETFs. So let's quickly go down and talk through the fees for each of these different ETFs. So for the iShares Core S&P 500 ETF, which is IUSA, the fees are 0.07%, so that is our second lowest. Then for the Vanguard S&P 500, the code for that is VUSA. Again, the fees for that are 0.07. Then we're moving down to the HSBC S&P 500 ETF. The code for that one is HSPX, and the fees for that are 0.09%. So as you can see, there's quite a range in different fees for these different ETFs, and it's really important to get the right one for you. Okay, so we have covered the All World ETFs and also the S&P 500. Now we're going to move on to an area that is a little bit more controversial when it comes to investing in ETFs. We're going to move on to tech-related ETFs now. Now, there is a lot of talk about tech being in an investment bubble, so I would definitely be doing your research before you invest in any of these ETFs, and I certainly wouldn't personally have the whole of my investment portfolio in tech at the moment. So please always do your own research. I am not your financial advisor, and I want you to make sure that you're comfortable with any investments that you're making. So with that said, I'm going to talk you through a couple of different tech ETFs. One of them I am holding, and it has performed exceptionally well. The returns have been over and above the S&P 500, and I have been very happy with that. But please keep in mind that there may potentially be a tech bubble, so please do your own research. So the first investment that I'm going to talk you through is IITU, and that is the iShares S&P 500 Information Technology sector. So those are the tech stocks from the S&P 500. So you're not getting the whole 500 US stock market, you're simply getting the tech stocks. So you are getting 65 different tech stocks in this ETF. Now the past performance for this ETF has been absolutely phenomenal, with 5-year annualized returns of 25.20%. Now that is exceptionally high. That means that on average every year for the last 5 years, it has achieved over 25% returns, which is obviously very, very strong for an ETF that has very low low cost. So the cost for this ETF is just 0.15%. And as I said, I am invested in this in both my investment ISA and also in my self-invested personal pension, or SIP. So if you're looking for specific exposure to the tech market, then it might be worth looking at this ETF. Now, the next investment is even more niche, but it has performed exceptionally well and might be worth you doing some research on, and it is the VanEck Semiconductor ETF. So the code for this is SMGB. So this has 3-year annualized returns of 23.73%. So there are only 25 different holdings in this investment. So it is very niche and very specific. So you really do need to do your research before you invest. So semiconductors are the basic building blocks of microchips and obviously fall into the tech sector. Now, the biggest holding in this ETF is Nvidia, and Nvidia has done phenomenally well of late, which is obviously pulling up the performance of this ETF. So Nvidia's year-to-date performance is over 85% already. So this might just be an ETF that is worth looking into for you. I personally wouldn't have this as the core of my ETF. I might have it as a satellite investment or a smaller part of my investment portfolio. But it is a very interesting ETF that is worth having a look at and doing a bit more research on. Okay, so finally we are going to be moving on to ESG or SRI ETFs. Oh my gosh, there's a lot of different codes in this video. So ESG stands for Environmental Social Governance. So these are socially responsible investments, essentially. Now, some people aren't interested in socially responsible investments, which is fine, but what is really positive about these investments is not only are they socially responsible, they also bring in very high returns. So you are getting a specific market that has then had a screen or overlay put over it for ESG. So an example of an ESG investment that I am currently holding, I hold the iShares MSCI USA SRI ETF. So the code for this is SUUS. 5-year annualized returns are 15.65%, and the fees are very low as it is an ETF. They are 0.2%. So this currently has 166 holdings, of which the top 3 are not Microsoft, Apple and Nvidia. They are Microsoft, Home Depot and Tesla. So this ETF reflects the return of the MSCI USA SRI Select Reduced Fossil Fuel Index. So if you are interested in making some socially responsible investments that also have high returns, then this might be an ETF that is worth you having a look at. So moving on to our next ESG ETF, that is the UBS S&P500 ESG. So this is the S&P 500, but overlaid over that there has been an ESG filter, which has actually led to higher returns for this ETF than the S&P 500. So the code for this ETF is S5SD, and the 3-year annualized returns are 15.41%. And for reference, the S&P 500's 3-year annualized returns are just under 14%. So you are getting higher returns with this ESG screen. The fees for this are just 0.10%, and the 3-year standard deviation is nice and low at 12.35%. So we want to ideally keep the standard deviation of investments nice and low, because that does show that they're less volatile. On that note, if we go back to the Semiconductor ETF that I was previously talking about, you can see that the standard deviation for that ETF is 27.42, so much higher. So that is a much more volatile investment, partly due to the fact that it is very specific and niche, and partly due to the fact that there are only 25 holdings in that ETF. So those are all the different ETFs that I would consider looking at if you are choosing to make new investments in the next financial year. These are all investments that I have taken my time to look at, that I am considering adding to my own investment ISA in the next financial year. I hope you found this video useful. If you have, I'd love it if you would subscribe. I'm getting very close to 5,000 subscribers, which is amazing, and I am so pleased with that. So thank you so much if you've taken the time to watch the video all the way to the end. If you could give it a like, I would absolutely love that too. And I hope you have a really, really lovely day. Bye bye.